This is Matthew Kratter from Trader University, and today I want to talk about whether the US government or any government can suppress Bitcoin's price. This is based on a thread by Willy Woo that's actually been getting quite a bit of engagement on Twitter. He calls it a dummy's guide to selling 42 million Bitcoin, and he's playing on the fact that everyone knows there's only 21 million Bitcoin, and this is sort of hard-coded into the consensus rules. He goes on to say, you think I'm kidding, there can only be 21 million coins. Then he goes and talks about various Bitcoin exchanges that allow you to lever up positions. So you could deposit 1 Bitcoin and that would give you control using leverage over 10 Bitcoin or 100 Bitcoin. And then he goes on to talk about the futures as well and how the Bitcoin futures markets may be being used to suppress Bitcoin's price, and the fact that fiat's unlimited, and so the governments have the potential to short an unlimited amount of Bitcoin and thus keep the price down. So in order to understand this, we have to kind of think through the steps. And if you haven't traded futures, this may be a little bit unfamiliar. But it would basically go like this. If the US government or any other government wanted to suppress the price of Bitcoin, so the first thing the US government would need to do is to print up some fresh US dollars. And this is very easy to do because the Federal Reserve possesses a technology called the printing press, as Ben Bernanke taught us, and as we've seen over the past few years. And so the US government can really issue an unlimited amount of fiat money, print up money for itself that it can use for its nefarious purposes. Then it takes those US dollars, opens up a futures account or some sort of prime brokerage account at JP Morgan or BlackRock or one of these places, one of these big banks. And then what they do is they go and sell as many futures as they can on the MERC, on the Chicago Mercantile Exchange, where the Bitcoin futures, the most liquid contracts, trade. This will drive down the price of Bitcoin without the US government needing to own any actual Bitcoin, any real Bitcoin or physical Bitcoin, we might even call it, contrasting it with paper Bitcoin. And that's what we'll talk about a little later in this video. Now, this is all made much easier by the fact that CME Bitcoin futures are cash settled. The US government doesn't need to own any actual Bitcoin in order to do these trades, since all daily settlement prices and the sort of the cash that moves in and out every day when the contract settles, and also the final delivery, they all take place in US dollars. And it's important to note that this is unlike some of the physical commodities like corn or wheat or gold, for example, where you need to be able to deliver the actual commodity if you are shorted all the way to the expiration of the contract. So the US government can do this using CME futures. It can also do the same thing, as Willy Woo points out, using a Bitcoin exchange or a crypto exchange and getting their leverage from the exchange. So they deposit maybe 1 Bitcoin and that allows them to control 100 Bitcoin or 1,000 Bitcoin even, depending on what the terms are. And the US government can do the same thing with the sort of the over-the-counter market, the OTC market, directly with banks, entering into swap agreements and forward agreements and other derivative agreements that agree to sell Bitcoin now and repurchase it later, hopefully at a lower price. So these are different ways that the US government can sort of artificially generate paper Bitcoin, fake Bitcoin, using derivatives, futures, forwards, swaps, these sort of things, and use it to suppress the price of Bitcoin. Then the question is, can this actually work? Well, it certainly seemed to work back in 2017, and it may just have been a coincidence, but Bitcoin peaked in December of 2017, almost to the day when Bitcoin futures first came out on the MERC, and a lot of people have drawn people's attention to this. If you want to see how the futures look on the CME, I'll link to this this page right here where you can read the overview and you can see the settlement prices, etc. if you want to check that out. So as we said, Bitcoin peaked at 20,000 in 2017 at about the same time that cash settled Bitcoin futures were introduced on the Chicago MERC. Bitcoin price suppression seemed to be going well for a few years. The price was driven all the way down to call it $3,000 or $4,000, and it seemed to be working. Of course, these years, this was, call it 2018 and 2019, these years also coincided with years 3 and 4 of the Bitcoin 4-year halving cycle. And this is a time, these year 3 and 4, as we're discovering now, when Bitcoin prices are usually weak anyway, even without any sort of government price suppression or manipulation program. And then something else happened. Bitcoin went through its May 2020 halving. It began to melt up. It broke back above the all-time highs of 20,000, where it had been when these futures were first introduced. It went all the way up to 69,000, taking a very volatile path, as we all remember. And it looked at that point that the government had temporarily lost control of the price of Bitcoin, assuming this sort of manipulation is actually going on. But then something happened over the past 12 months, 10 months. The price of Bitcoin cratered, and we're now below 20,000, where those futures first came out. So we don't really know, is this the result of these futures? There's the open interest on these futures is not enormous, or maybe it is just the Fed's aggressive hiking, which has made basically every asset class go down in price. Bonds, stocks, gold, real estate, all risk assets have declined as the Fed has begun to roll off their balance sheet and raise interest rates. If you're finding this video helpful so far, I just ask you to hit that like button, hit that subscribe button, and share this video with a few friends. So there is a precedent for this sort of price manipulation. And what happened when the US government left, when the US left the gold standard in 1971, there was this problem with gold going up a lot. It went up a lot in the 70s. And one of the problems with this is gold is a way of telling central banks that they're doing a very bad job, that there's inflation, etc. So there's definitely the motivation for governments to suppress the price of gold over the past 50 years. It seems to have worked out quite well. You can read more about it at GATA, which is the Gold Antitrust Action Committee, and they've been trying to sue the government and pursue various actions to stop the price suppression of gold. To little effect, unfortunately. Past 10 years, gold has really failed to keep up, and it's not even been a decent hedge against all the quantitative easing and Fed money printing. This is a very deep rabbit hole, so I'm not going to go into it. I've discussed it in previous videos, but you should know that there is this history of gold price suppression that looks very real to me. There's a lot of manipulation that goes on the London, the LBMA or whatever it's called, and there's a lot of unallocated gold paper, etc. It's a very deep rabbit hole I don't want to go into now, but you can certainly pursue it. And what a lot of people are worried about is that Bitcoin will be suppressed in a similar way, because Bitcoin tells everyone how naughty the government and how naughty the central banks are acting by printing money. Now, I would say the one big difference between Bitcoin and gold, among many differences, for example, Bitcoin is much more portable. It's easy to shoot around the world. Gold is much more difficult to move. But one big difference is that governments and their central banks, for historical reasons, still own a lot of gold, and they don't own a lot of Bitcoin. So this would be one difference. Whenever gold starts to creep higher, they can knock it back down, not just with gold futures and other gold derivatives, but also with actual physical gold from their coffers. Governments apparently don't own much, if any, real Bitcoin in the same way that they own a lot of physical gold. So it's not a perfect comparison, but this is a concern that governments could suppress the price of Bitcoin, which I'm going to discuss in this video. But before I do it, I want to make this distinction because I often talk about physical Bitcoin or real Bitcoin. It's kind of funny to call it physical because it is a digital reality. But what I mean is something distinct from paper Bitcoin. Paper Bitcoin I use to refer to what I call Bitcoin IOUs. This would be Bitcoin left on an exchange, Bitcoin left on an app, Bitcoin left at Celsius, any Bitcoin that you need someone else's permission to move or access. It would also include Bitcoin derivatives like the Merck futures that we've been talking about. Real Bitcoin would be Bitcoin that can be verified by your node as real Bitcoin. It's something that where you hold your own private keys and you don't need to ask anyone's permission to move it around. This is Bitcoin that you control the private keys to, and you hold it probably on a hardware wallet or in a multi-sig solution. So my conclusion is that governments can definitely use paper Bitcoin, futures, swaps, other derivatives to suppress the price of Bitcoin over the short term if they choose to do so. Are they doing this now? We don't know. It's very difficult to know for sure. But what are the medium to long-term implications of some government price suppression being applied to Bitcoin? Well, I think it's more complicated than the critics understand. So what happens is when a central bank prints up fresh US dollars in order to enter into these short positions and short some paper Bitcoin, they increase the overall supply of US dollars, and they devalue it in this way against real things like energy, food, houses, things in the real world that they cannot print. People get pretty mad when gas and food prices go up too much, when there's too much money printing, and this can create political unrest, as we've been seeing in 2022. So central banks, they use those freshly printed US dollars to try to keep the price of Bitcoin down by selling futures on it. But unfortunately, this very act of printing US dollars increases the dollar value of each Bitcoin because Bitcoin itself is scarce as well. It's scarce like crude oil, it's scarce like food and houses. It's not something that can be printed up by the US government. And so the more money printing there is in a country, the higher Bitcoin's price goes versus that fiat money. So if you're somewhere like Lebanon or Turkey or Venezuela or Zimbabwe, the price of Bitcoin in the local currency has been skyrocketing as they print a lot of money. And this has also happened over time as the US dollar has been debased through too much money printing. So what's happening here? What's happening is the Fed, if they pursue a strategy like this, is they will be amassing a growing short position, a short futures position, or a short forward contract in an asset whose price they are driving up by printing more fiat. And this is really a recipe for disaster for any government that attempts it. We can all remember what happened with GameStop last year in 2021, when a lot of large hedge funds were shorted and a bunch of retail investors, Wall Street Bets, came in and tried to drive up the price and cause a short squeeze. And we saw what happened with GameStop. Something similar could certainly happen with Bitcoin as well. So if governments suppress the price of Bitcoin in the short term using paper Bitcoin, there's a real advantage to this because it allows you and me to buy undervalued real Bitcoin. And you can see the distinction I'm making here. They're shorting paper Bitcoin, but in the short term, the price of paper Bitcoin and real Bitcoin is obviously highly correlated. And when they short paper Bitcoin, it allows you and me to buy undervalued real Bitcoin. It's undervalued, and we know it's undervalued because we suspect, or we're hypothesizing, that the government is keeping the price artificially below where it would be trading without government intervention. You don't need to suppress the price of something that you're not worried about going up in price. So what I would say to the government, what I'd say to the Fed, what I'd say to the federal government, and say to Uncle Sam, thank you for the cheap sats. Uncle Sam, I encourage you, please keep shorting Bitcoin. Please keep printing new US dollars. Please keep increasing the building upward pressure on Bitcoin, because every time you print another dollar, it pumps the price of Bitcoin a little bit over time, simply because it increases the supply of fiat dollars. So I'd encourage Uncle Sam, keep shorting it, keep printing new money, keep giving us cheap sats. And what are we Bitcoiners going to do? We're going to keep educating people about dollar cost averaging into Bitcoin every day, every week, every month, buying a fixed dollar amount. And so you don't worry about the price. You just slowly allocate your paycheck, some percentage of your paycheck into it if you've done your research and you like Bitcoin. Dollar cost averaging, withdrawing Bitcoin from the exchanges. We need to drain the exchanges. And then hold your Bitcoin on a hardware wallet or in a multi-sig setup. And I'm going to talk about this at the end of this video. If enough people become Bitcoiners, and if enough governments are short Bitcoin, what we're going to be able to do, and this is a beautiful thing, is we will be able to bankrupt entire governments and their central banks through a massive short squeeze. And there's going to be no one left to help them, as there was various regulators that tried to come in and help the corrupt people at Citadel and at Robinhood and try to screw over the retail investor that was short GME. They're not going to be able to do that because we're talking about entire governments and central banks getting blown up in a massive short squeeze. And what's going to happen next is the short squeeze is going to get even worse, because smart governments and central banks will join the short squeeze once they realize that they cannot fight it. And so this is a short squeeze that will not end. Bitcoin's not going to come crashing back down after in the same way that GameStop did. This is going to be the short squeeze to end all short squeezes. Now, there's actually a chance we never get to this point, because if you think about how it's actually going to play out, the game theory of it suggests that it's actually much better to be the first central bank or the first government to buy Bitcoin, and El Salvador seems to be pioneering the way, rather than the first one to short it. So if your central bank is shorting Bitcoin while another central bank is trying to corner the whole Bitcoin supply with freshly printed fiat money, your central bank will be on the losing side of the trade. And at a certain point might be tempted to flip to the winning side of the trade. Instead of shorting Bitcoin, cover their shorts and actually buy some Bitcoin. Here's a message to the US government, if any of you guys are listening, if you understand this. if the US government, if you continue to suppress the price of Bitcoin, you should realize that you are actually digging your own grave. You are going to end up in the worst short squeeze that a country has ever seen. You should stop suppressing the price of Bitcoin, and you should stop doing it immediately. And you should actually do the reverse. As a national security measure, the US government should partner with the Fed, print up a lot of money, start buying real Bitcoin, and create a Bitcoin Fort Knox. It's already quite likely that the CCP in China, the Chinese Communist Party, is mining Bitcoin and hoarding it. The CCP banned Bitcoin mining in the summer of 2021, but it appears that it's still going on. And the fact that it's going on in such an authoritarian country that has such control over its people suggests that it's probably happening with the blessing of the CCP, and they might actually be doing the Bitcoin mining themselves. And this is the reason that China has returned to the top second Bitcoin mining hub geographically in terms of its hash rate, which is really unbelievable when you think about it, because the hash rate basically went down to zero and then crept back up. And it's probably the Chinese government that's mining Bitcoin. US government should get its act together and start accumulating Bitcoin as well. In the meantime, what can you and I do? Learn how to withdraw your Bitcoin from the exchanges, hold it on a hardware wallet like the Trezor or the Cold Card. If you leave your Bitcoin on the exchanges, you are part of the problem. You're contributing to this huge overhang of what may or may not be real Bitcoin. So you should withdraw it, hold it on a hardware wallet. And I'll link to this video that teaches you how to buy Bitcoin the right way, how to withdraw it and hold it on a Trezor hardware wallet. And I believe at the end of this video, I also talk about multi-sig as well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.